Mike, check. Okay. I went to the restroom, so I had to mute myself. You can hear me? Okay.
Yeah, but why do you want to give your money away? Why do you want to give your money away?
You guys ready, Tony?
Hey, everybody. Am I on? Am I on? Hello? Beta? You got me? You hear me? Okay. Welcome. We want to welcome everybody to Signature Real Estate Group and VA Rep. This is our first Lunch and Learn of the year, and we're excited. We're going to be doing this every month now for the rest of the year that teach people more and expose you more about the VA loan process and how it works, how it benefits everybody. It benefits everybody. But VA Rep has been around for about 7-8 years, the Las Vegas chapter for about 6-7 years. And what we do, we're here to help get veterans off the streets. There's way too many homeless veterans in this country. We all know that. And VA Rep does a lot of different things we give away homes. We have a lot of fundraisers, which is a lot of fun. We have what's that? I want to blank on the rally coming up. Poker Run, thank you. Yeah, the Poker Run coming up May 22nd. And we hope you guys can get involved with us and help us help the veterans, one veteran at a time. Again, I'm Ellie Morris. I'm with Signature. In the back of the room is Jeremy LaRiviere. Jeremy LaRiviere. Jeremy's on our board of directors, and he is our education chair. Michelle Kim is here somewhere, way in the back. She's our membership director. And I'm going to introduce you on a great gal, a great friend of mine. And Shelley knows the VA loan process as well as anybody. Prosperity Lending is just a fantastic organization. They're partners with us, and we love having them here. So please welcome Shelley Panzarella.
Hi, everyone. Can you hear me? I always worry about not holding a mic, but I'm going wireless today. Beta, am I good? I got the thumbs up. All right. So welcome. Thank you. I know it's so different for all of us to be here and to see each other without the face mask, but my name is Shelley Panzarella. We are with Prosperity Lending. I'm going to take a minute just to introduce our group really quick as Jason is about to pour his iced tea. So Jason in the back is a loan officer. We have Miss Jenna up front here, and then Angelique is our marketing person, and then Tony back here, hard at work or hardly working, is back here as well. So this is our Prosperity Lending team. How many of you have done a loan with Prosperity Lending recently? Of course you have done your loan. Oh, and Mike. How many of you have done a VA loan before? Awesome. How was that experience? Good, great? Awesome. Perfect. So what I'd like to really do to start off, just to break the ice, as well as to help me feel more comfortable and settled into my skin, I think in our business, real estate is relationship, right? And so I would love for us to go through the room and just do a quick introduction of everybody. Tell us if you're a veteran, tell us if you're a realtor, lender, title rep, and then also what office you're with. Is that okay? Good with everybody? Are you here for the VA? Awesome. We'll start in the back then. Awesome. Well, thank you. Thank them for their service. And then we'll come out to this back area here.
Oh.
Hi, yeah.
Oh, hi. I'm Naomi. I work here in the office. I do have some clients that are VA right now.
And you're out of Southwest?
Yes.
You're with Signature? Great. Perfect. Go ahead, Kathleen.
Hi, I'm Kathy, and I'm in the Summerlin office, and I am engaged to a veteran, and
Aww.
about 85% of my closings this year have been VA, so
Wow.
I'm like, I need to know as much as possible.
Awesome.
I have a good background, but I'm glad to learn more.
Yeah, wonderful. Well, welcome. Go ahead.
Hi, I'm Jessica. I'm with Pinnacle Lending Group, and I do marketing for them.
Awesome.
I am not a veteran, but I'm excited to learn more.
Perfect. Welcome.
I'm Emma. I'm also with Pinnacle Lending Group. I'm a loan officer assistant and not a veteran, but I do assist in a lot of.
Do a lot of VA loans. Awesome. Perfect.
Hi, I'm Ashley. I'm newbie realtor with Signature.
Which office are you out of?
Here.
Southwest. Welcome.
Hi, I'm Laura Newman. I'm in the same boat as her, brand new here, just trying to learn as much as possible.
Awesome. Welcome.
Lenny Zavindan. I'm with Elite Realty, veteran, and then I'm a member of the
Thank you for your service. That's awesome. You want to, we'll go, I'm going to mix this up so you guys all stay on your toes.
I'm Mike Rasmussen. I'm co-owner of Signature, and I do a little bit of everything. The LO, broker, run an insurance company now. I am a two-time veteran.
Two-time?
Yep.
Wow.
Which is possible. If you recruit, they'll go back in.
They let you back in?
Yeah.
Just kidding. Just kidding.
You have a whole lot of choice the second time. They
Yeah.
just call you back, so, yeah.
Perfect.
And I've done a ton of VAs and used mine several times. So.
Awesome. Thank you. You were introduced earlier. Do you mind if you share where you're at also? I know Jason was introduced. Yeah, Michelle.
I'm Michelle Kim. I am with Barrett and Company Realtors, and I'm on the board of directors as the membership director of VA Rep. And I am a U.S. Army veteran also.
Thank you for your service. Wonderful. All right, we'll go here. Miss Janet.
Okay, hi, I'm Janet Carpenter. I'm the managing broker of the Summerlin office. And I'm not a veteran, but I'm going to tell you I have served my time.
Amen.
I was a Navy brat. My husband was in the Air Force for 30 years. And when I first got into real estate, my sphere of influence was Nellis, and I didn't do anything but VA loans.
Wow, I didn't know that.
Yeah.
Thank you, Janet.
And I also, one more thing, I was at the very first founding meeting of VA Rep, which was the top of Mandalay Bay.
Wow, that was a while ago. Yeah, I was part of that also. That's pretty exciting. Go
Hi,
ahead.
I'm Monica. I just started. I'm at the Summerlin office. I'm a realtor.
With Signature, awesome.
I'm Gail. I'm also with the Summerlin office. I'm fairly new with Signature as well.
Welcome, welcome. We got Jenna and Angelique.
Hi, everybody. I'm Anthony. I'm with HomeSmart Encore, realtor for 2.5 years now.
Wonderful, welcome. And then I'll go over here.
Hi, I'm Giovanna Quiseno. I'm a realtor out of the Green Valley office. I'm not a VA.
Awesome, thank you. Well, and so for those of you who don't know, our master marketing and wizard on the camera is Beta. For those of you in the Signature office, he's a creative director for all things that you see that are posted inside of Signature. So it really is an honor for me to be here. One, because I also have served on many trade organization boards. VA Rep is also very near and dear to my heart, simply because I was part of, I don't think I was part of the founding, but I definitely was part of the beginning of the formation of VA Rep. And so how many of you are actually members of VA Rep?
I don't think I've paid my dues.
You have, she hasn't paid her dues right here. I'm going to call Janet out. No refunds, Janet. So if of anything, one of the great things that they do, and they've always done, is the education component of it. So to find out that I'd be able to teach this part of it was really exciting for me being in the new year, but also because I truly believe it is one of the most underserved for our most served clients. And I think some of it is just because of the education aspect of it. So this course will be completely interactive. My hope is that any question that may pop up in your head, whether it's from financing, whether it's from the home, we've got great brokers here that can kind of help walk us through answering those questions. So please feel free, now that we all know each other, to ask those questions out loud, okay? Any questions before I get started? No, all right. Okay, so the number one reason that I love VA loans is because it's 100% financing, right? One of the great things today, especially in our market, is the down payment, right? How many of you have clients today that struggle to come up with a down payment? Yeah, so zero down payment. I know in our market right now, the closing cost aspect of it is out there where sellers are not necessarily contributing, but I'll show you a way that you can actually allow your clients to get your VA clients to get in with literally the zero down. There is this thought out there that VA financing, it's like a dollar down program. I don't know that I was in the era when it was really called a dollar down payment program or dollar down program. It has always been 100% financing for me, and I've been in the industry for over 20 plus years. And it's obviously that the buyer does have to pay, our veteran does have to pay closing cost with that. So 100% financing, no down payment. This is one of my number one reasons that I love our VA loans. So last year, 2020, I know that was like a fast blurb for us, but 2020 they actually made the announcement that they would remove the ceiling for our loan amounts. So what does that mean for us? So for FHA financing, the maximum loan amount is $362,250. For our conventional financing here in Nevada, it is $548,250. Did I say that right? $362,250 FHA, $548,250. Previous to 2020, the VA loan was actually capped at the conforming loan limit, which is $548,250. What you'd have to do in order for us to do anything above that is they'd have to actually come in with a down payment, then thus removing that 100% financing for our VA loans. But today they've actually lifted this, and so you can actually get a VA client in using their full entitlement up to with no limit on there. So I recently have just closed a VA client of ours, 100% financing, $1.6 million. The ceiling that you'll probably see is going to be most of your lenders. Your lenders will probably cap that. For us at Prosperity Lending, our cap on that is going to be $2 million, and we will absolutely do exceptions on that, more than likely up to $3 million. But for a client who, our client was able to get in 100% financing, so no money down. He beat out the cash offers because the biggest concern was, the appraisal side of it, but he actually beat out the cash offers, and we closed it within 30 days. So runs the normal course as far as financing is concerned, but this has really been a huge opportunity for our veterans where they're not having to come in with a down payment. Any questions at all about this?
I want to know what his monthly payment was.
Let me put that together. Actually, I didn't even think about that. Let me just actually see what that would have looked like. Fortunately for him, he was able to take advantage of it prior to the little rate increase that we have. So he was locked in at 2.5, which is the other great thing, right? That stays in traditional rates. So his principal and interest payment was $6,500. Yeah, $6,500. So know that this is definitely something out there. If you ever hear a super high jumbo zero down payment, this is more than likely what they're mentioning is this 100% no max for VA financing. Any questions at all about this? No. Okay. All right. The other benefit to a VA loan is that there's no mortgage insurance. How many of you understand what mortgage insurance is? Okay, so if a client puts less than 20% down on a loan, or their financing is FHA financing, there will always be mortgage insurance. It just depends, right? For conventional financing, it depends on how much they're going to put down. For FHA, also, depending on if they put a minimum or they put more than the 3.5% down, there is a variation on that mortgage insurance. For VA, there is no mortgage insurance. And the reason this is extremely important is this actually will help the client's buying power. So imagine in an FHA scenario, $150 on average for mortgage insurance. That technically would equate to like $30,000 to $60,000 in a buyer's buying power, if not more, just based off of sales price, right? So this being an added benefit, you'll be allowed to qualify. You'll be able to purchase a little bit more of a home being a veteran or utilizing your VA loan. How much what?
Would his PMI have been your client?
Yeah, so that's a great point. So speaking to that, jumbo financing today, I don't know of any lender right now that's doing anything less than 10% down. 10% down for us is a super 780 credit score, 18 months reserves, very, very super solid client at a 10% down. And that's just happened most recently coming after, the shutdown and pandemic and all that stuff. So he got in 0 down payment, but if he'd even put 10% down, he would have been either at a higher interest rate or he would have had a mortgage insurance, which probably would have been close to $500 to $700 a month, right? Which could have actually not allowed him to qualify for that property just because of that. Any questions at all as far as mortgage insurance? None. Okay. We're running through these so fast, guys. All right, number 4. The number 4 reason I like VA financing is you can actually have multiple VA loans. I've always heard this mention that a veteran can only have one VA loan, and it's actually incorrect. You can actually have, depending on the entitlement amount that they can have multiple. So if they have if you've had somebody who may be relocating here to Nellis Air Force Base, maybe they purchased a home in Virginia as an example, and they have an entitlement out on that current home, they can actually purchase here in Las Vegas utilizing a portion of that entitlement. And so it'll follow up to that cap of the $548,000. The point to that is that you know that they are able to take advantage of a second VA loan. I think a lot of people think you just can't have two, so you have to sell that other home, say in Virginia or anywhere else, even here in Las Vegas. We had a client that purchased a home, single, and then he got married, had kids, needed to upgrade. When he purchased the home, I think it was, in the 200s, whatever the case may be, he was able to qualify 100% financing for that second home, ultimately up to that top limit for the conforming loan limit, but he was able to buy a $300,000 second or additional home utilizing his VA financing. That original loan still remains as a VA loan for him today. We actually can even refinance as a VA investment property because he did actually occupy that property. And so we did a VA investor refinance for him because we could show that he actually occupied that property. But in that particular case, he does have 2 VA loans. Any questions on this? Yeah.
If your VA can buy investment properties with it, but if you still want to live in them first, so you can keep your first home. Well, let's say if it's first home conventional, then we want to get a second home that will always occupy. So we can do VA on that, and then
His first home is conventional? Mm-hmm. Yeah, it won't matter if his VA. He can buy it at any time, doesn't have to be his first home. He just has to occupy that home as primary residence for the VA financing. So he did.
You can keep that home then and buy another one with VA.
Yeah, and that's exactly what he did. So it converted into an investment property, but it was not intended to be occupied as an investment property. And that is the one thing, we'll go through that as well. VA loan is 100% owner occupied, with the exception of a multiplex. So if a client is purchasing a 2 to 4 unit property, they have to occupy one of the units as owner occupied, and then they can rent out the other 2 to 3 units. And that technically is an investment property, right? But he has to, or they have to occupy that property. Yeah.
Is there a minimum time required if you live in, if it's your primary or you live in Thailand?
So I hear it a lot that there's like this 1-year rule that's out there, but I always attribute it to this like the ham in the oven story where it's just something that everybody started off many, many years ago. And so everybody just thinks that there's this 1-year statement out there. From a lending standpoint, there's not an actual guideline that says you have to live in your home 365 days in order for it to be primary residence. It's about an intention. Right, and so they have to move in within 60 days to deem it as an owner-occupied property. That is actually in disclosure side. But imagine an active military who purchases a home today, but then gets transferred out to Texas. We wouldn't penalize him because he just bought this home owner-occupied, right, and now is being asked to relocate. His intention is that he occupied the property within 60 days and intended to be here owner-occupied. It just, life happened and, things moved him out of the state. And so he then has an opportunity to purchase a home in Texas as primary residence. So there's no real, absolute number that you have to occupy that property. You do have to get into the home and occupy within a 60-day period, for sure. Does that answer your question? Okay, perfect. Any other questions on this? All right. The other reason I love VA financing is the flexibility of the guidelines. Now, during COVID, this minimum 580 credit score changed for many of our lenders. It didn't change for VA, but a lot of the lenders, because of the just risk around it and just because everything was kind of getting crazy for all of us, I saw this number actually get the 580 minimum FICO get lifted to 640, 620, 600. We will actually finance to 580, but what you're going to see today, and I think lenders are back in there. For Pinnacle, do you guys finance at 580 for VA loans?
No.
Okay, 600 or? Mm-hmm. So there's a price. There's usually going to see you will usually see a pricing disparity in there. So usually it'll be a little bit higher of either a rate or cost for a lower credit score below 600. 620 in some cases. One of the great things about VA financing, though, is there's no waiting period for short sales or foreclosures. Whereas for FHA, you've got a 2-year for bankruptcy and a 3-year for foreclosure and short sale. And then for conventional, you have 4 years for bankruptcy, short sale, and then you have a 7-year for foreclosure. So the flexibility around guidelines for veterans, to me, is the best. I mean, as far as all product types out there, they are the most flexible. One of the other things as well is, although you hear a 41% debt-to-income ratio, that's like a common knowledge for VA, we've actually been able to approve a buyer, close a buyer that's higher than that 41%. We recently have closed someone that was actually at a 64% debt-to-income ratio. They had great residual income, they had great credit, and they also had great reserve. So it doesn't stop you as far as debt-to-income ratio. They're actually the most flexible when it comes to that. Any questions around this? Yeah. No.
Is there any, like, minimum FICO score, obviously 580 or whoever lender, is it, does it affect your rate anymore, like if you have a better FICO score, or does FICO score really make a difference as long as you make the minimum?
There's a sweet spot for every loan. VA, I would say, I mean, yes, the answer would be if the higher the credit score, typically the lower the interest rate. And I think that applies even with VA. I feel like where VA sweet spot, though, is closer to like a 640 to 680. For conventional, you're more like 720, 700 up, and you're in that desirable, not even desirable, just sweet spot as far as an interest rate is concerned.
640 or above, that's where you're going to get the...
You're going to see more of your, improved pricing or improved rates on that. Yeah. And some lenders are going to be different. So some of theirs could be, the benchmark would really be 660 for VA. For us at Prosperity, it is actually 620 is a pretty good, is a good credit score for us for our government loans. Any other questions on that? You want to add to that at all? You're good? Okay. All right. How many of you have heard of Tidewater? Oh, people have gone through. Okay, good. How many of you have gone through a conventional or FHA reconsideration process? How many of you liked that? Not fun, right? Because you don't get notification that the appraisal's coming in low, right? You just kind of like, oh, here you go, here's your appraisal, it's in. The great thing about VA is they offer this Tidewater opportunity. And so anytime you hear this word Tidewater, you need to like drop everything as a realtor, know that we've got issues with value, and hopefully your lender will be providing you with this Tidewater statement immediately. Typically, we have 48 hours to respond. And that's not 48 hours for you, the time we talk to you, but from 48 hours from the time that the appraiser has officially issued that Tidewater response. What I tell everybody is get as much information as you possibly can to support value, because we don't know if they're off $100, we don't know if they're off $10,000 or $1,000. We just know that the appraiser is coming in and saying, I cannot meet your sales price. So the best thing to do is gather every single comp. We usually request it from our listing agents and as well our buyer's agents so that we can gather as much information as we possibly can. We will put it together. Back in the days we had to put these beautiful grids together, but now we can just send the information to the appraiser and then they have 48 hours to basically respond. And then at that point they will actually issue the appraisal. So from that, typically about 48, 72 hours after Tidewater, we'll usually get a response from the appraiser. Any questions on this? No? Okay.
Okay, so, Mike,
Yeah.
Everything's going overpriced. And so one of my listings just went overpriced and to a VA buyer. And, but the appraisal's been done, but they waived the appraisal contingency.
Yeah.
He's putting a lot of money down, has that money. But they said that we may still have to go through the Tidewater process on this. And so even though that contingency has been waived, and I've already given all the comps to the appraiser and written up all of the other things, what else can I do?
So I'm glad you brought this up. So the question was on an appraisal contingency, and this actually deals with it not just for VA, but also for conventional and FHA. So right now we're seeing a lot of clients want to waive the appraisal contingency standpoint. From a lender standpoint, whether it's VA or FHA, you have to have an appraisal. So the contingency aspect of it is something that your buyer is going to take on, that they are not going to be, they're not going to be restricted by this timeline. My hope is that your lender is ordering the appraisal in on time. With VA specifically, it's the same process either way, right? The appraisal has to get ordered. They have to give us a Tidewater if it is low, and then you go through that kind of routine. You don't even have to. You can actually just say thank you for the acknowledgement. Go ahead and submit the appraisal as is. You know, obviously want to give it the best opportunity for value, but you technically don't if your client is like, I don't care what the appraisal is, you know, especially in that VA scenario. But for conventional financing, the appraisal waiver thing seems to be popping out a lot. How many of you guys have heard of the appraisal waiver for conventional financing? Okay, so ultimately what it is for our buyers who are utilizing conventional financing, we can submit a loan through what we call our automated underwriting system, and it will give us a decision of a property inspection waiver, which we're calling PIW or an appraisal waiver. That ultimately means on a conventional loan, no appraisal is needed. So regardless of what happens with an appraisal contingency or whatever the case may be, before this time frame, we were actually asking our clients if they wanted to take advantage of the appraisal waiver or if they wanted us to order the appraisal. Now we have clients asking us if I can fire off an appraisal waiver so they don't have to order an appraisal. But know that that is 100% on conventional financing. So for VA financing, whether you do an appraisal contingency or you waive the appraisal contingency, that borrower still has to perform, we still have to perform in getting the actual appraisal. Yeah, regardless of what it is. Is that clear for everybody? Any questions on that?
So the loan will only go up to the appraised amount?
Then in that particular case, what will happen is that 100% the zero down payment, we will base it off the lesser of the appraised value or the sales price. So if it is short or lower, then yeah, we will base it off of that lower amount. If your client's coming in with extra money on a VA loan, she's already planning to put money down, right? So it's not necessarily an issue because she wasn't coming in doing 100% financing. Does that make sense to everybody? Okay, perfect. Any questions at all about Tidewater? Okay, so you guys all will reach out to your lender or reach out and let everybody know that when you get Tidewater, you know that it's an important message for you that you have to act quickly, whether you're a listing agent or buyer agent. Awesome. All right, so talking through the property type. So we talked a little bit about the multifamily. So it's used for our single family residents, our planned unit developments. I think like 80% of Vegas is planned unit developments, townhomes, and then condos. There's actually a condo website that will let you know whether whether your condo is VA eligible. Do you guys have the websites for VA or FHA approved condos? Have you guys ever seen that before? Have you seen it? Yeah, so there's actually more VA eligible condos than there are FHA eligible condos. So if we get your information after class, I can go ahead and email you the links. I'll email you the presentation deck and some of the other goodies that I have in here. But take a look at it, because you can, if you're a listing agent, this is a valuable link for you to use so that you can open up the financing considerations so that a veteran can actually take advantage of it. And then obviously for manufactured homes and our 1 to 4 unit properties. Any questions at all about this? No? All right. How many of you are hearing a lot about building your own home? Not new construction, but literally building your own home. Seems to be a craze because I'm hearing that builders right now are on like a 2 to 7 week waiting period and then a 8-month build time depending on whatever new construction place that you're at. So we actually have what they call an OTC, which stands for one-time closed construction, for VA financing. So it follows exactly down the parameters of the loan, so 100% financing. Their minimum credit score is going to be a 640 to utilize this program, but they can truly pick up a land, build a home on it, all utilizing the VA financing. For you as a realtor, this timeline would probably be a little bit extended, closer to like 45 to 60 days, because it requires your clients to go out. This is once they've found the land, but to go out and figure out what they want to do to build. And that's not an easy process. It's totally different when you're walking in and you're like, I don't like the cabinets, I don't like the flooring, I don't like this. But when you're literally going in there, ground up having to figure out, well, I want to put a bedroom here and I want to put a kitchen here and I want my island to look like this, that timeline is a lot longer. And so for this actually will allow you up to 90 days to complete the construction loan, but you as a realtor are going to get paid on it when we close on that. So within a 90-day time frame, then they can go and build this beautiful home, close on the land, all that fun stuff. So that's a VA one-time construction loan. Monica.
Shelley, is that something that would apply if somebody wanted to like put a modular or manufactured home on some land?
It does include manufactured. Yeah, I think there's a different credit score requirement for manufactured, but it does actually allow for that as long as they're obviously attaching it to the land.
And is that type of financing only for VAs, or could they get other type of financing in essence?
It's also for FHA, to be honest. We also do a construction a per, and we're doing land and construction buys for conventional financing. This specifically, because this is our VA class, this is for VA financing. But yes, to your point, it's for USDA as well. So I know out in Pahrump, you guys are eligible out there for that. And then FHA and VA, which the great thing about this program is it's your traditional minimum down payment. So it's not additional, money down to actually do this. But in today's world, I have, literally in the last 6 months, I have had more clients want to build their own homes than they have wanted to wait at a new construction site. So this is an amazing tool or amazing program for us that we've been able to launch for you guys.
Can they
Yeah.
do that if they already own the property?
The land?
Yeah.
Yeah, you don't have to roll the land in here, but if you have a client that wants to do the whole package, they can. The reason it's called a one-time close, so typically what would happen is you'd have a client that would go out, maybe they own their own land or they have land that's financed, and then they go out and they take on a construction loan. So it's one loan for the land, one loan for the construction loan. And then the home is completed, and then now they take down what they call a permanent loan. So you literally have 1, 2, 3 loans now that this client has gone through. This actually takes them from land all the way to closing, including the construction loan aspect of it. They'll close it, and then they just have to build it within 9 months. 9 months to a year. I think they'll do a year depending on the sales price. But for us as lenders, realtors, you pretty much close once that construction loan has finalized. Yeah?
Can your veteran be an owner contractor?
You cannot. Yeah, you cannot be owner builder on this. You have to go, the builder has to be approved. To actually go through this. And so that process, they can become approved, but it cannot be an owner builder. We do, on a conventional side, we do have an option for the construction financing to be owner builder. Yeah?
So when you say when the loan closes for the realtor to get paid,
Yeah.
you mean once they get funded, not when
Yeah.
the house is completed?
Correct. Yeah, so the expectation would be, I would say 90 days, just say worst case, just because if you've ever been in new construction before, right, and you have your client go into the option world and they go into the design center, that doesn't happen overnight, even in a design center that has all the bells and whistles and everything waiting for them to pick. It usually will take a couple weeks. So this client goes in and says, you're going to construct a home, so they have to find the plan that they want to build, and then they have to do the designing aspect of it. So I would say it takes about 30 days just for them to go through that piece, right, to find out really what the end result will be from a sales price or cost to build amount, and then you go into kind of financing aspect of it, and then you go into closing. But once the loan is closed, because it's the one-time loan or one-time close, it will ultimately stop. You'll close, you'll fund, the land sale would be completed, and then they start building their home. Great question. Any other questions on this? Dan? All right. Down payment assistance. How many of you have heard of Home is Possible? Okay, so I know a lot of you are like, well, why would you need down payment assistance, Shelley, if it's 100% financing? Well, in today's environment, how many of you are seeing seller contributions? No? Are you seeing seller contributions in Pahrump or here in Vegas?
I just closed last month. It took 7 months, but I got the seller paid all closing costs, 10,000 seller concessions. It was like the deal of the century.
It started 7 months ago, though? Yeah, I think that's probably the difference.
It happened, and what happened was the buyers had to have a waiting period because they got relocated.
Oh, yeah.
So for their financing, they had to have 6 months on the new job, but they did end up buying with Home is Possible, so they had that plus seller concessions and everything.
That's,
Fantastic deal in the end.
Well, so with VA specifically, everybody's like, well, why would you need a down payment assistance if you have, it's 100% financing, but you're going to have closing costs, right? Every loan is going to have closing costs. There's no way to avoid that. So with the Home is Possible, you can actually take advantage, and this is, what day is it? Today's rate. So today, for our Heroes program, their rate is going to come in at 2.75. This is just a traditional 30-year fixed, no down payment assistance, just for them to take advantage of the rate. I think this is still below market interest rate today for them. If they want to take advantage of using some assistance, so for the closing cost, as long as they have a 640 credit score, they could qualify with a 3.725 rate and get 3% assistance. So your borrower could technically get in with zero down payment and their closing costs utilized. We're also now seeing that you can take advantage of this in the event that an appraisal comes in short. So you can use that as their ability where if you need to go a little bit higher on an appraisal, you need a bid over appraised sales price just because of the competitive nature of today, they can utilize some of these funds to cover the gap, basically. Any questions at all for this? Yeah.
Okay, so you're pretty clearly, is this a combination of the VA financing and Home is Possible?
So it is actually one loan, but we will, the lender will ultimately, this is your down payment assistance program. So you have the different rates from 3.725 to 4.5, and then you'll see the varying assistance amount. And then here you have the Hero program, which is just your below market interest rate for a VA loan. So they still have to come in with their closing cost, is at 2.75. So how many of you are actually signed up for Home is Possible as far as a realtor is concerned? Have you? Okay. So if you're not, I'll send you this link as well. I would highly encourage you to get on here to do it. So you'll go through here, you'll sign up as an agent. They give you all of the great marketing tools. If you work with one of us at Prosperity Lending, we also will pull these together for you for co-branding purposes. But one of the main things, how many of you like leads? Yeah. How many of you like to pay for leads? Great. So this is a free lead gen. So I've been on this site for probably maybe 10 years, and I would probably get one a quarter. And it's actually a valid lead. And you know what they're doing? They're literally just dialing for somebody to pick up the phone. So be the realtor that picks up the phone if you see this phone number. But get yourself on here because they'll also send you all of the great updates. They'll send you all the new marketing things that are coming out. They also have a teacher program, which can be utilized with your VA in conjunction with your VA financing. But I would definitely encourage you to take advantage of this. I think you can also get certified through them with a quick hour course on here, so that can be online. Any questions at all about this? Yeah.
Okay, so I did take a class for Home is Possible.
Yeah.
Because I don't get anything, I don't get leads from them. So it was just a class, it was different.
Yeah, so the only way that I know I'm getting a lead is they'll call in and they'll literally tell me, hey, I was on their website and you're you're the lender that popped up, or I was in the specific zip code. That's it. Yeah, but I really, truly, most of us who are on, are you on there as far as lending?
Yeah, I just got my first lead yesterday.
There you go. Yeah, it is something, it's a free, lead, right, for us, so why not take advantage of this? The other nonprofit that does this as well is Nevada Rural Housing. Do you have anything, Jason, or you look like you're going to say something? Okay. Any questions at all? So will you guys all promise me that one thing you take away from this today is that you're going to sign yourself up for the realtor side of this? You too, Tony.
Shelley?
Yes.
Can I just say something real quick?
Yeah.
Going back to the chart that Shelley has there with regard to rates.
I can't find it.
Usually about
Her, Tony.
2% will cover the
Tony.
closing costs for the borrower.
Tony.
I know every
That's for the video.
I know every transaction's different, I realize that, but usually 2% will just about cover the closing costs. So if the borrower is struggling for money, can't come up with the closing costs, you can see 3.125 with 2% of assistance, or the other option that Shelley mentioned, the Heroes program, lower interest rate, but zero assistance. So different options there. But I've actually been at the closing table, and the borrowers doing a VA loan have actually gotten the earnest money back. So pretty smoking, Thank you.
Thank you. Any questions for Tony? Any other questions on this? Okay. So keep this in mind as we go to our next slide. So the number 10 is max seller contribution. So for VA, it's 4%, and that includes the realtor, that includes the lenders, or just one lender, hopefully. But realtor side, listing, buy side, and of course seller. I know our world today is probably not a huge seller contribution environment, but the one thing I want to point out to you guys is that you can actually use these seller contributions to help a borrower pay off debt. So we've had collection accounts, or we've had maybe DTI issues, and so they need to pay off some credit cards in order for them to qualify. Even though they have flexible qualifying guidelines, you can actually utilize this contribution to pay off some of those debts so that their debt-to-income ratio can qualify them. How many of you guys knew that information? So truly, this is something that I think a lot of people don't realize is available specifically for our veterans. They can also use the VA funding fee or pay off the VA funding fee. So for our veterans who are not considered more than 10% disabled, there is a funding fee. And depending on if it's their first time use or second time use, that number varies. The first time use I think is 2.3, and then the second time use is 3.6. If they are considered more than 10% disabled, that is actually waived. But if they did need this, and this happens to create some, some ceiling for them in qualifying, you can actually utilize some of the seller contribution and/or the down payment assistance to pay for the gap here for them for the rate, as well as to help them buy down the interest rate or to help them prepay some of their HOA dues. But the limit on that is 4%. Different than FHA. So FHA is 6% seller contribution. And then conventional with the minimum down payment at 5%, the max seller contribution is 3%. Any questions at all on this? All right. Okay, so we talked a little bit about like our founders from that started VA Rep. This actually has just come into place on the loan applications. As much as your lenders probably are not super happy about the loan application, this was one of your added features on here, and truly it was because of the VA Rep organization putting this together. What this is inside of our loan application, I can't remember the page, I think it's page 7, or section 7, we're required to ask the question. And the reason for this is because there are so many veterans out there that have no idea that this program is available to them. They're ready to buy a home, they're going through the whole loan process, but they don't realize that they can qualify for this amazing program with 100% down, no mortgage insurance, flexible underwriting guidelines. And so this was actually brought into place because of the focus from VA Rep. To be very honest with you, this was like a huge thing that the founding organization really worked towards doing, and this just came into place as of March 1st this year. So it is really, yeah, it really is and personally for me, I hate that this happened, but I'm grateful that we actually were able to catch it before. It's just because people don't think about VA financing, right? And so I actually went down the path of doing a loan for a client. I think he was going to FHA, and he made a comment about he was going back to serve to base somewhere. I think it was like I think it was going back to what do they call where they shop?
BX.
PX, yes. And I'm like,
Well, it depends on the branch of the service. BX for Air Force.
I think it was BX. So it just made me like clue in, like, wait, did you say you're going to the base? And he's like, oh yeah, I was retired, X amount of years. I'm like, oh my gosh, are you eligible for VA financing? He's like, well, I have no idea. So we went through the route of actually pulling up his DD 214, pulling up his certificate of eligibility. The reason I share this story with you is because I think I'm a pretty good loan officer, and I missed it. And I just can imagine how many other people missed it. And so I'm so grateful that this is actually part of our world that we have to ask, and we have to educate as well. So I have a client that is also VA eligible, and he's like, I don't want to take advantage of it because he's not considered 10% disabled, and so he has a funding fee. But the point of this is being an active participant in a board like VA Rep, this is the result of that, and this will help many veterans get into a loan. Any questions at all about this? You're on the new application, right? Do you like it? Do you love it? It's different for all of us. It's different for all of us. All right, this is something cool too that I just found out about. So for your realtors, I think this is page 9. Do you recognize this, Janet?
Yes, I do.
So how many of you have heard about the VA escape clause? Okay, so I don't know why this like separates lenders from realtors for some reason, but there's a lot of debate around when it needs to be done. There were some lenders who literally would not move the file forward if it was not fully executed. It is now part of your real estate purchase agreements. So no matter what, we're going to get a deal done. That VA escape clause is in there. If you have a new purchase agreement and your lender is asking you for this escape clause, kindly direct them to the RPA. I think it is page 9. This is like very top of page 9, and it will show the VA escape clause. And this should be used. They don't need to send anything else out. This should be acceptable as far as those disclosures are concerned. Your clients, your buyers will have to sign our disclosure, but the fully executed by seller, agents, and the buyers, this is acceptable. Any questions on that? Who put this together, Janet? Was it Forms Committee or?
It was a number of years in the works. I think that it was actually thrown into the last revision before it got published of the RPA. Now, last year, there was no Forms Committee, so the board and the attorney basically worked on the revision of the contract. And there is a Forms Committee this year, and it was thrown in this year at the very beginning of the year. Even though the contract says 12/20, it was approved in 12/20, but it didn't come out till like February.
So this was, Brandon Roberts was Forms Committee at one point. Was that his doing?
2 years ago.
2 years ago. Gosh, time flies when you're in a pandemic. All right, so this is great news for all of us as agents and lenders, so we'll stop like arguing about when the actual disclosure needs to be signed and who should sign it and when it should be signed. Any questions at all about this?
Well, I would say that's one of the reasons that it was put in is because, not Shelley, but a lot of lenders would send that at the very, very end. Okay, we're gonna close in 3 days, you need to sign this. And if they backed out or something, sellers had no idea that, hey, the property didn't appraise, I'm not going forward, I get my earnest money back. And they were tying up a lot of EMD deposits.
And I think that is the thought around it, is that if a seller executes this and the appraisal happens to come in low, but it happens to be after appraisal contingency time frame, that buyer is going to be able to get their earnest money back. A lot of people started to begin to think that this was just everything, all inclusive, not specific to the appraised value, but if the buyer couldn't get qualified, then they would just throw out this VA escape clause. This escape clause at the time was specific to value on the property, not anything else.
So this is basically saying if it doesn't appraise, then they can get out of the agreement?
Yeah, but you have your appraisal contingencies, you have your loan contingencies, so yes, but this is actually a requirement for FHA and VA. So we're really excited to see it in the contract. And for those of you who don't know, this is the past president of LVR. I thought maybe she had some doing in this, so I was going to thank her for it.
I worked on it last year on the board when I was just passed.
Just All right, I know we touched a little bit on this. This is basically the occupancy on this. For any VA loan, you do have to be primary residence. You can also be veteran and your wife, or spouse. And then you can actually do a VA loan for 2 eligible VA borrowers, so they don't have to be married. But typically you're going to see either this situation or individual. If it goes to, if it's 2 separate VA borrowers who have eligibility, that typically has to be sent directly to VA to be underwritten, but it is absolutely possible. I've had it where, dad and son are veterans and they want to purchase together, but you can't be dad and son and the son is not eligible for VA financing. Both of them have to be eligible. Yeah, Janet.
So the very first offer I ever wrote was 2 single females, active duty, and they both had to use their VA. Now that was years ago, so my question is, has that changed?
It's still a portion. So if it's 50-50, right, then one would use, they were married or they were not married?
No.
Yeah, so they would use whatever portion, but equally would be split. if you have a husband and wife that are both eligible for VA financing, you can make a decision on whose you're going to use. I've used, where the wife is considered more than 10% disabled, we'll use hers, but then if she's in a VA loan and they want to utilize, we could actually use the husband for the next purchase. So.
But if they're both veterans and they're not
Married.
married and they want to buy together, they both have to give up a portion.
A portion,
That's still
equally.
the same.
Equally, yep.
Okay.
That is still the same. Any questions at all about this? Yeah.
One more, sorry.
That's okay.
So if you have a father and son, both veterans, son has horrible credit, father has excellent credit, they go together, is the father going under almost like a cosigner in a way?
So the bad credit is the hard part, right? Meaning that they can still qualify for VA financing.
Just by the father's score, if the son has a really bad score?
He has to actually be on the loan, and we would look at his credit. So there's no way to just have the two of them and just use dad's credit.
So if he has like that, like say your thing is 580?
Yeah.
If he's at 580 and maybe doesn't have the income and stuff, then they can lose the
You can do it absolutely like that.
If he has 500 FICO score.
Yeah, then you can't use his income, and you couldn't use you wouldn't want to put him on the credit. They do both have to occupy the property as primary residence, so. Yeah. Any questions at all about the occupancy? Okay. All right, eligibility. So this is for our active duty, reserves, and there's different ways that we check this out. Our active duty will pull through e-benefits, through our systems as well, whether they've been in service for 90 days, 2 years, they have their DD-214 if they've been honorably discharged. Reserves, there's a point system that we have to go through. It's typically once they've been in the reserves for 6 years, they will be able to be eligible for VA financing. And then we've actually done a loan for a surviving spouse. So surviving spouse, the husband passed away in connection with service duty, and we were able to take advantage of his eligibility. We also were able to refinance in a situation where she became widowed. It was a VA loan, and they kept the occupancy. She lived in the home, and we were able to refinance it in her name only, using still his eligibility.
So if the spouse dies of old age, she doesn't get his VA?
She can't buy it to purchase, but she can, if they're in a home that was VA financed, then they can absolutely, she can refinance, but she can't purchase. Good question. Any questions on the eligibility? All right, so some of the terminology which, different than our world today, but like COE, what does that stand for most of us?
Close of escrow?
That's right, close of escrow. But this is actually certificate of eligibility. Yeah. LES, does anybody know what that is? What we call it is a pay stub, but for them it's a leave earning statement. And so if you're talking, first of all, if you ever talk to an active military veteran, for me, what they always call me is ma'am. So I know immediately now, that's my trigger line. Okay, have you ever served in the military? Are you active? And then, sometimes it's even, oh no, I just have family, was raised in the military. But this lingo and terminology is definitely something you want to know if you plan to work with veterans or VA borrowers. The DD-214 is the only time they get that is going to be when they discharge. And they're going to get, I think it's like 4 or 5 pages. We want copy 4 of that, DD-214. And then FF is our funding fee. So I talked about a little bit on the funding fee.
And you'll see a DD-215, and that's when they've made a mistake on the original 214. And it happens a lot. You'll actually see that. So make sure if their social security number doesn't match their 214, you have to have the 215.
I will also tell you that we have seen a lot of older DD-214s that were done, and for whatever reason, the dates on the birth dates were incorrect. And so, unfortunately, we do have to. Was that yours? No. You have to go through the process to actually get the documentation. You have the veteran call in. They have to work through this to get the DD-214.
So as someone who did 26 years between active, reserve, and guard, then that's the DD-214 is an active duty release. Right? But if you're National Guard, when you do it, it's called an NGB-23.
Yeah.
So it's the same thing, but if people don't see DD-214, they often dismiss it. And
Yeah.
So you're not qualified. But the NGB-23 is the same thing for the National Guard.
Thank you for that. I actually have, There it is. Oh, it's 22. Is it 22 or 20?
22, I'm sorry.
Okay. Yeah, so, and that's something your lender is gonna know, but just know that if you're talking to a client, you wanna talk the lingo, so to speak, and these are some of the things, and DD 214, the yeah, 22 would be for your reservists. Any questions at all about this? No? Okay. All right, tax exemption here for Nevada. Have you guys heard of this exemption that we have? Are you taking advantage of it?
I am.
Awesome. So you can go directly into our assessor's page. And listen, the one thing that I say about this is not because you're going to sell a house, but this is because you're going to help a veteran, right? And so knowing that we have this to add value to our clients, whether they're ready to move forward with purchasing with us today, this is one opportunity for them to discount either their registration for a car, or if they eventually purchase a home or are about to purchase a home, make sure that they know that this is available to them. So this is the veterans and then disabled veterans. And ultimately what this does is they'll fill this form out, and this will give them an opportunity to get a discount. I think a lot of people take the car registration versus the home just because it's a higher amount. But know that it's there. Anytime I talk to a veteran, whether they're working with us or not, I always ask them if they've taken advantage of the exemption.
So it's based on level of disability for the veteran. So, for me, based on my level, mine is, the home is actually better than the vehicle. But you're right.
Oh, good.
Sometimes the vehicle is, so it's just something, if you know about it, you would be a valuable resource to your client, because it's a complex thing to navigate through Clark County. But if you learn about it, that would be great.
Yeah, and that's the whole point, right? Maybe your client today is not ready to purchase a home. Obviously, the goal is to get them into home ownership, but imagine you're providing a veteran who owns a car this opportunity, and that helps them save a couple $100s off their car registration. Who are they going to look to go to purchase a home when they're ready, right? They're going to look to you guys because you know this. You're providing them with information to help save money on just even their car. Why wouldn't you do it for them on their home? Any questions at all about this? Yeah, Monica.
Did you say that's something they need to choose one or the other? They can't have that savings both on the car and on their vehicle?
Yeah, it's one or the other. They can't have both.
And you have to have a disability to get it, or?
No, I don't. You can.
So for the exemption for the home, the amount you can get increases based on your percentage of disability.
Yeah, but you don't have to be disabled. You can get a exemption without having the disability factor on there. All right.
A quick question.
Yeah.
So what if there's a veteran and then there's the National Guard? So will they consider each one separately if they're married, or they can only use one or the other?
So you would more than likely want to use one eligibility or one entitlement for the financing. There's really no, unless they were, if one of them already had a home and they had some entitlement out, then we'd want to utilize a portion of the other ones, or just fully the wife or spouse. But your lender will help them walk through the decision on who's going to make more sense to who's to use. Because if some has, I think I mentioned it earlier, if you have a client or a married couple, one of them has a VA disability, and so they're eligible for no funding fee, but the other one has just regular traditional entitlement, I would use the spouse who has the disability just because they're not going to have the funding fee on there. So yeah, I wouldn't, for you as realtors, I mean, it's good to know that information, but your lenders should be guiding them through that process.
And then when it comes to the affidavit portion of it,
Yeah.
how does that part work if they're married?
For the exemption?
Yes. So
That, you know what, I don't know. So they both go on title and they take from an assessor standpoint. I don't know if you know the answer to that. So she's basically asking, so they're wanting to take advantage of the Clark County exemption, right? If they're husband and wife, they can't get both. That I do know, but can you pick and choose who can use what?
Yes, because we use mine. Right. And so, because we're not both veterans, but we just use mine even though we're both on the mortgage.
But if she were also a veteran, you'd have the ability to choose who's to use for the exemption?
So one's a veteran, one's a National Guard. Is one better than the other?
No. No. As far as the exemptions go, they're the same.
Yeah. All right.
They can get
That's
exemption
it.
even if they don't have a VA loan.
Yes, that is correct.
That's the key to it.
Absolutely.
That's the
Yeah.
key to your answer.
Yeah, so great point, thanks, Mike. So, and that goes into the whole, like, they don't have to be buying a home. You are a resource for them, right? Everything in our world, not just about relationships, but it is also adding value to our clients, whether they take advantage of closing with you or working with you today, or hopefully in the future because of the things that you provide to them today. That is all that I have regarding VA. How many of you guys feel more informed about the loan? Yeah?
Yep.
Anything that you learned from this today? What would be the one takeaway you got? You can just spit it out.
I didn't know that I could do down payment assistance in tandem with a VA loan. I had no idea.
That's awesome. And you're going to sign up for the, you're already signed up for Home as Possible. Perfect.
So I would have to say I've used VA loan 3 times personally. And the first 2 times, I had to know more than the real estate people in the transaction because they didn't know. There's a lot to learn, and you can bring some amazing value added to your clients.
Yeah.
Because the first realtor that I had that said, here are the programs available to you, I was like, oh, thank you. I didn't have to go through all that. And there's a lot of nuances to it. I mean, it's a complex program. So the more you know, it's like that little jingle, the more you know.
The better you are.
Yeah.
Yeah, and so, I mean, I'll just piggyback off of that, working with the right lender partner as well, who's very experienced in doing these loans, not just within, individually, but your whole team as well, who knows how to operate and maneuver through VA financing, is not just VA, but any loans. But if this is really going to be your niche and you've got clients that you really want to focus on, partnering with the right lender is important because they need to be able to guide them through this same process and, going through what the highlights and benefits would be for them. Benefits and pros, right? For some of them, it may actually not be a great program for them to utilize. They could utilize a conventional loan instead, or FHA. Yeah.
I'm not sure if you covered it when I stepped out, but on investment property and stuff, as long as it's owner occupied up front and they live in it for 1 year, they can continue to rent that property out as an investment property after the fact. And the reason I bring this up is I'm a personal example of it. My entire real estate career was built on using my VA loan to buy my first property, and I've used that VA loan probably about 35 times now.
You're like 35 years old. What are you talking about?
And to use an example of that is if you have any young clients, there are a lot of young soldiers right now that are active duty that are thinking they're going to go into building up their real estate portfolio. It's very big in the military, probably for like the last 20 years, correct me if I'm wrong, where, a lot of times they'll buy a property when they move, come to one duty assignment, and then they'll keep it and rent it out and move on to when they get stationed somewhere else, they'll buy another house and rent it out and so on and over again. So it's almost a natural transition for them. The key is obviously they got to, either if they get up to their eligibility limit, they've got to refinance out of that first property. But if you have somebody who's really big into wants to become a real estate investor, the VA is literally one of the greatest vehicles that was ever created for that. Because the biggest problem with most young investors is how they figure out how to get their money back out of the property once they buy it, right?
Yeah.
Because the BRRRR method, right? Where you buy it, you rehab it, you rent it out, and you refinance it. Well, with the VA, you put very little down.
Yep.
As long as you meet the requirement of occupancy for the 1 year, you're good to go. And most of them don't know it.
Yeah, that's the biggest thing is the education aspect of it.
My last question, and I don't know if you can answer this, but it's open to any, I don't know,
Anybody.
if he's an agent, but yeah, anyone. So right now with the market, ideally sellers are basically looking at the net proceeds, so more than likely cash and conventional buyers are winning over FHA VA. Is there something that you could recommend that we could put in the contract to help that VA get that offer accepted?
I don't know if you can put anything in the contract to make it, I guess I would leave that up to the broker to answer.
I think the issue is the misperception that the VA is a long,
Well, let me
arduous
clarify,
process.
since I'm asking the question, if I may. It's the fees. So there's certain fees that VA.
There are not allowed.
There's only 2
Someone has
fees.
to-
Yeah.
There's only 2 fees.
Yeah.
Two that the buyer
But
can't.
some agents don't understand how to articulate that, and I don't know if anybody else has problems with it, but ideally, the conventional and the cash buyers are winning. even though I feel like the VA is the stronger buyer, like I would prefer the VA buyer because less money out of pocket, more than likely the deal is gonna go through.
Yeah.
But it's, people are not seeing it that way. They're looking at the net proceeds only, and even those two. So is there something that we can put in the contract to like
No.
ensure?
There's nothing.
Unfortunately, it's market driven, so areas that have lots of VA clients are very, very used to it, nobody cares, right?
Yeah.
Here, depends on what part of town you're in.
And this is
Jason.
why we are here, right?
Yeah.
And for those who don't know me, I'm Phil, I'm the president of the A-REP. That's why we're here.
You can come up
Is
if you want.
No.
You're sure?
That's why we're here, is to bridge that,
Gap.
that knowledge gap, that the VA is this less than preferable loan process, okay? I've had 3 in my career, my history, and it was the only way I could buy a house. And so the more we educate people to realize this is not an arduous process, it's actually beneficial, the better off we all are.
The other thing I want to make a comment.
Yeah.
Because we're a military town,
Yeah.
you have no idea how many people would want to buy, sellers want to pay that extra fee and sell it to a veteran. They prefer that than not.
Right.
So I'm telling you, those fees, they mean nothing. And they're only,
Yeah.
how much is the escrow fee? 50/50 of the escrow fee, they pay that.
400
and the pest
maybe?
inspection.
That-
That's it.
yeah.
It's nothing but this.
Something that you can do too is it's true that the seller has to pay for some of these things. The buyer cannot as a veteran, but there's also nothing that says that if they're selling it for $300,000, that they can't decide to sell it for $301,000.
Yeah, you can increase that.
And the other thing too, remember this, in a down market, you need to tell your sellers that the VA is probably one of the best offers they can accept.
I know.
Because someone's doing it gets, the appraisal goes through.
Yeah.
and The pre-approval happens, the pre-approval at the market, it's happening.
Yeah.
I mean, you see almost, the only time you
No
ever see
fallout.
VAs fall out is when it's an active duty member and they get orders to ship out. And then that'll fall apart, but the rest of the time, they're golden. They're the best clients you could ever have.
Janet?
I think the biggest part is, for lack of a better term, ignorance on the part of the listing agent.
Yeah.
Because I did have an agent call me one time and chewed me out royally about one of my agents and said, my buyers want to see this house and your listing agent has marked conventional FHA and cash, why won't he take VA? And I said, well, I don't know, but I'm gonna find out. So I called my agent up, and basically after I chewed him out very nicely, I said, do you know what the VA loan? He said, my seller's not gonna pay all those fees. I said, what fees? You don't even know if he's asking
right.
for anything. I said, have an escrow fee and a termite inspection, big deal. And he ended up calling the buyer's agent back and saying, yes, we'll take your VA offer and send it over.
I think in today's environment, it's happening whether you're VA, FHA, or conventional, right? You don't have sellers running out, like you're moving those customaries to the buyer side just to try to stay competitive, regardless of what the program is. I started this off saying.
Proceeds, and I just think that agents need to do a better job of educating
100%.
the benefits of using a VA
Right.
buyer
Yeah.
versus, yeah.
And the stigma even, I think the old school thought is these VA appraisers are, going to come in short because they have no idea what the market is because they're, 100 years old or whatever the case would be, and so they're coming in to appraise our market. But the reality of it is we have the Tidewater process, which is one. We've actually gone to bat twice when the Tidewater came in short and took it directly to VA, and they actually increased it. I realize in this market may not be, from time is of the essence, is not necessarily something that would happen, but I think a lot of people misunderstand that it's the same appraiser. They actually have more, they have more things that they have to review as far as the value and as far as the saleability of the home and things like that, but it's the same. I mean, now we're even getting our conventional stuff that they're looking at it to see if it has like a condition 5 and it requires a second level review. Plus, VA appraisers have a specific time frame that they have to complete an appraisal. How many of you have been working with a lender? Hopefully none of ours, but we have committed time frames for our appraisers. But I have one appraiser that just went out sick because he got COVID. that appraisal, we had to remanage and put all of the appraisals somewhere else. So for VA specifically, in our region, it's 7 business days. So 3 days to get the actual acceptance from them, and they have by law or by VA guidelines to get the appraisal back to us within 7 days. And you get the highlight if you get the Tidewater response if they're not going to meet value on that. So I do agree with you. It is education, 100% education. Yeah.
Can I add one more thing to that? Make sure you educate your sellers. If you have an older seller, let's put it that way, that grew up in the era where the VA appraisal and VA inspection were, I mean, I literally, my very first VA home I purchased, it was a side-by-side duplex. I was gonna live in one side and rent out the other. And they came in and refused to give us the appraisal, failed to appraise because it needed paint on the inside. All right, I was gonna be the property manager and run the place and fix it up anyways, right? But that was what it was like all the way up until about the mid-90s. That doesn't exist anymore. That problem's not there. So if you have an older seller and you need your seller consultation, you know, getting them ready to list, make sure you talk about the VA process, that it's a great offer if he comes in to look at it, because it's the reality. You just got to educate the clients too.
I mean, so this seems aimed primarily at buyer's agent's side. However, 2 years ago, in Austin, Texas, which the real estate market is on fire.
Yeah.
I own a duplex there, and we were gonna gut it, renovate them, divide them into 2 condos and sell them individually. And the agent that I got in contact with, when she did a contract, she said everything but VA, right, as a listing agent. Of course, I said, why is that? And she said, oh, VA is so complicated, it's just gonna drag things out forever. And I said, well, you have 2 choices, right? Add VA, or I'm gonna find another agent. So this seems like it's aimed more at the buyer agent, but this is really important on the listing agent side as to what loans you're opening this up to.
Yeah.
So.
Yeah, I mean, I opened this up today saying that, you know, we closed recently on a $1.6 million VA loan, 100% financing, went up against cash. So it is absolutely doable for any buyers. I think it's really just the education part, and this is really what this was about, you know, is to give you guys an idea. I would also say I started out with VA Rep a long time ago with all the different trade organizations. They helped me get surrounded by different veterans so I could understand, recognize what the lingo is, also become a servant to them because they've served us. So I would highly encourage, if you guys are looking for trade organizations or wanting to be partnered with VA Rep, they were an amazing conduit for me to learn the business, to learn this niche of my business. It's helped me to become the expert that I am today. But you guys want to close it out at all, Ollie, or Michelle?
Quick question.
Yeah.
Going back to the scenario with 2 VA loans,
Yeah.
or acquiring a second VA loan. The first one is in forbearance. How does that impact things? I think I know the answer, but I just wanted to clear it up.
You know, I honestly don't have the answer for forbearance on VA. I believe that, I will get back to you on that. So that's a great question though on forbearances, because I do know for FHA, conventional, I have that guideline, but you're saying one of the borrowers is in forbearance.
The first loan is in forbearance, or the loan on the primary residence.
Okay.
But they want to use the eligibility to acquire another property.
Okay, let me find out about forbearance on that. I know that I would assume because they're flexible guidelines that it would be very similar to how they would do on a purchase standpoint. But right now, a lot of the servicers with forbearance are requiring minimum payments of at least 3 coming to terms on agreement, but I don't know 100% on that. So I will add that as a takeaway. For those of you who want some more information or any of the information that I shared with you here, please feel free to leave your card or some information so that we can get this emailed over to you. And then don't forget that Jenna, Jason, Tony are all part of, and Angelique and Kaylin are all part of Prosperity Lending. So we are all here to help answer any of your questions today or in the future. Thank you. And I'll turn it over to Ellie.
I just want to thank you all for coming, and if you're not a part of VA Rep, we'd love to have you with us, because we are growing and we have a lot of great things happening. You can get with me, Phil, or Michelle after. We can tell you how you can become part of our great organization. We'd love to have you. Again, thank you for coming out. There's plenty of food, want some more food. Please have some, and again, thanks a bunch.
Thank you.